This is Cece. Welcome to the Orbit. It is Wednesday, April 10th. We are a few minutes into the trading day, and this is a CPI morning. We've got stocks reacting to a hotter than expected CPI. We are looking at the SPX right now, down about 1.1%. That's a smidge more than what options were pricing. Options were pricing about a 0.9% move, maybe towards 1% on the close yesterday. We saw a little bit of a spike in IV into the close yesterday for zero DTE options for today. And what we are seeing is we'll call it 1.2% move lower right here. And you can see where that lines up with this week's chart. We are right at that prior lows for this week. We are going to watch to see if that is able to hold. Going into QQQs, Q options we're pricing about a 1.2% move for the CPI, and right now we are down about 1.2%, so right there. Now you can see this lower low from the other day on the Qs, and we are not quite there yet, so that's an obvious level to watch. That is about the 435 level, and we are about 437. The expected move for the rest of the day is about 0.8%. So that's really only compressed about 0.3, 0.4% since yesterday's close and before the CPI print. Checking in on TLT, of course, we've got TLT down about 1%. Options, this is actually quite inside what options were pricing. Options were pricing about a 1.6% move in TLT. The big one, however, is IWM. And let's check in on IWM. And this is obviously very rate sensitive. It is down about 2.4%, 2.5%. It's been down even lower, down below 201. Options were pricing about a 1.8% move. There's a lot of small cap companies that are very dependent on borrowed cash. There's, a great example in here is like solar. There's the regional banks. There's all that kind of mix in IWM. And so this is very near-term rate sensitive. And it's an interesting one to watch for the rest of the day. If this is able to hold at that 200 level and it doesn't turn into a bloodbath, perhaps that is a positive for the market intraday. If this thing completely breaks down, will the others follow? Will the big cap stocks follow? We saw, which is 200, call it, going back to March 20th. And so that's something to watch for as far as the expected move the rest of the day. We are at about 1.1% expected move. So that would be 198.5 to the downside and 202.80 to the upside. Of course, we're watching this 200 level, and you can see the stock tick down as we talk. It's now down 2.7%. Going to SPX, let's talk about zero DTE trading. We had 51.80 to the upside and 51.15 to the downside, let's call it. We were right at 51.50, which again, as we've said, was an important level. And this is about the options were pricing about a 45 point move in either direction. Remember, the SPX had a really strong close where it ticked up about 15 points into the close just in the last few minutes. There was some late day action of people positioning before the CPI. They, of course, were on the wrong side of the CPI, and we're seeing the reaction. But 51.50 was basically what options were pricing when we were hanging out at that 5,200 level. So we are right there, and it's something to watch for a bounce. Speaking of that, if you had your finger on the trigger of a zero DTE credit put spread, right now that is down at the 51.20 level, risking about 400 to make 100. And that is an interesting one because the expected move is still 0.6%. You don't often see that into the trading day. We were almost 10 minutes into the trading day. So this is taking advantage, and you can see that IV is 30 up here, right above the chart. So that is what we talked about the other day on the orbit, which is taking advantage of a spike in vol, a down move. The CPI is out, but we don't know traders' reaction quite yet to what they're going to do. The initial reaction is down. Does this turn into a bloodbath, or does this bounce back towards 5,200? So for those that like to live a little dangerously early in the morning and like to sell against that initial move with the idea, the market is already down 1.2%, the chances of it being down over 2% are X, and I'm willing to bet 4-1 on that. That is what we're talking about with a credit put spread like this. You could leg into this credit put spread if the SPX bounced and took you up even to 5175 or something like that, not even getting back to 5200. Obviously, you could close the credit put spread. You could close it synthetically by doing the in the money call spread on the same strikes, or you could leg into an iron condor and try to get a call sale, credit call spread sale up above 5200. Now, we might be volatile the rest of the day, and it might be a day trading type day like that, or we could break down right here and not hold 5150, in which case even a 5120 might be too close. But this is certain ways to think about this kind of intraday risk reward.